Okay, well, fantastic. I want to welcome everyone today to Alamo Mortgage Holdings. Today, we're going to be talking about a really exciting investment opportunity in American mortgage debt. This is an opportunity where if you are a UK accredited investor or you're an institutional investor, you can actually purchase bonds or mortgage notes that pay passive income. And with this, you're able to obtain a very good return, hundreds of basis points higher than gilts. And you also have another benefit that we'll go through in this presentation. And that is a lot of the things that have been going on with the British pound and the US dollar over time. And I'm going to be talking about specifically why a United Kingdom investor might want to consider doing some diversification in their currency, because the pound has been going through a lot lately. And I'll kind of go through the history of that. So let's start the presentation. We have here three different opportunities where you can place funds. The first is a simple 3-year bond or note, and that pays 8%. There's also a 5-year bond or note, and it also pays 8%. And then there's a 50-year bond or note, and that pays 8%. Once a year on an annual basis, when we issue new bonds and notes, we set the new interest rate on those. But by purchasing a longer term bond today, if you decide to do that, you benefit because you've locked in that higher interest rate for a longer term compared to if we were in the future and we are in a position where we can issue at a bit lower rate. But this is something that we'll go through in detail. So all right, fantastic. So let's take a look here. And first, I want to go through an important notice. I want to make this absolutely crystal clear. This investment is only directed at persons certified as high net worth investors. So if you're not a high net worth investor, we are not offering this to you. We're not trying to sell this to you. Before making any investment, you should read the information memorandum, and you should make sure that you understand the risk factors. This is not an investment with zero risk like a government bond. This does have risk, and I'm going to just tell you that there's always a risk that exists in investing. But as experienced investors, I'm sure you already know that. So your capital and interest are at risk. Okay, so let's talk about the mission of Alamo Mortgage Holdings. The mission of Alamo Mortgage Holdings is to provide passive income to non-US accredited investors. So we're not looking for US accredited investors. We're focusing on United Kingdom. We're also focusing on institutions by purchasing real estate-backed mortgage notes in the United States, in the state of Texas, while providing greater liquidity to the owners of these mortgage notes. Alamo will earn money by purchasing mortgage notes at a discount. We're going in and we're negotiating hard to purchase those mortgage notes at a steep discount. And then once Alamo has that mortgage note, we're able to pay out fantastic returns to our bond and note holders. As an example, let's say that you purchase a private mortgage note that has an unpaid balance of $100,000. And let's further imagine that this hypothetical note has a 10% rate of interest. Let's say that you find a motivated seller, they just need cash, they can't wait 30 years for the note to pay off. And you say, well, I'll pay you, Alamo says, we'll pay you $70,000 cash today for the note, and we'll wait for years to collect the payments. To the right motivated seller, that will be appealing. Now, I know to many of you, that may not be the situation where you would never sell a note that way if you own such an asset. But there are motivated sellers in the world, and we provide a service to those motivated sellers. We're able to get them the cash they need where they cannot easily turn those notes into cash. And in exchange for that, they have to make it attractive for Alamo. So after the purchase, the borrower is now our borrower. So now we have a borrower because we bought the mortgage note. And that borrower that was making payments to the guy that sold us the note, now he has to make payments to Alamo Mortgage. This borrower has now, but his payments have not changed, even though we bought the note at a discount. So our yield on this hypothetical note is 14.2%, allowing us to pay out 8% passive returns to our bond investors. You know, folks, the current low interest rate environment, it really does not provide many options for investors to earn passive income, while also having the safety of capital preservation. Alamo Mortgage Holdings solves this for our investors, for our bondholders, for our note holders, by focusing on acquiring mortgage debt, hard assets, collateralized assets, exclusively in the state of Texas. We have a very focused niche market. We're not a company that's trying to do business all over the United States. We focus on one state. We know the laws in that state. We've got a team that's from that state. We've got 200 years of business experience and 100 years in the mortgage industry. And that's our business. And we are able to offer this passive income to you. We can supply it, and it's something where you can do one investment and for years you can earn passive income. It's not something where you have to do a lot of analysis of each mortgage note. We handle all that for you. So let's go to the next example. Let's say here that there is a property, a piece of real estate in Texas, and the price of it is $120,000. This is a real property. This is an example. This is not something we have in our portfolio. I'm just trying to demonstrate the concept. So this property is worth about 100,000 pounds, and the buyer put down a $20,000 US down payment. So he bought it for 120,000 and he put down 20,000. And this created a situation where the seller created a note at 10%. Now you might be thinking, why in the world would anyone pay 10% on a mortgage? Well, folks, the reason for that is a lot of people, they may not be able to get a mortgage from the bank. They go into the bank and the bank says, you know, you don't have a high enough credit score. You don't have enough work history. You're self-employed. No mortgage. We won't give you a mortgage. And these sorts of people, they still want to buy a home. They're good people. You know, they still want to make their mortgage payments, but they're cut out of the market. They just don't have the option. And Mr. Seller, of course, Mr. Seller would rather sell it for 120,000 cash to a cash buyer. But you know what? No cash buyer showed up. He put it on the market. He tried to sell it and he couldn't. So now this situation has been created. And as a result of this situation—
1 second, Ben. 1 second, I'll be right back.
Okay. So in this type of situation, the seller was not able to sell the property, but found a buyer that wants the property. And the buyer said, listen, please, I want a house. I'll pay you $20,000. Please let me make mortgage payments to you. And the seller said, I don't know. I mean, I really wanted that cash for something else, but I am at the point in life where I don't really need the cash that much. But if you paid me a high enough interest rate, I might do it. So they negotiated and they agreed on a 10% rate of interest. This is typically how this sort of note might be created. Now, it's a 360-month note, a 30-year mortgage note, and the monthly payments they work out at a 10% interest rate. It works out to a monthly payment of $877.57 per month. So now we have the opportunity to buy the note after 5 years have gone by. It could be any number of years, just picking a round number as an example. We kind of prefer to buy notes that already have some seasoning on them where they know the payments are being made. So that means there are 300 payments remaining on that mortgage note. The present value or the current balance owed on that note would be $96,574.32. Even though 5 years of payments have been made, we know how amortization works, where in the beginning of that sort of a loan, the majority of the payments going to interest. So that's one of the beautiful things about mortgage notes. So if we wanted to, or you wanted to earn a 12% return on your investment, you could pay a maximum, the highest price you could offer to that seller is $83,322.39. Well, of course, you're going to try $60,000, you're going to try $70,000, but there's a balance in there, and that'd be the highest you could go if you had a limit of I have to get a 12% return. So that means your investment to value, if the seller agreed to sell that note, is at 69%. There is literally $36,000 of equity in the property. I practically hope that the buyer doesn't make the payments. We'll take that property right back and be able to sell it. Now, I'm joking. I'm not actually wanting them to fail on their payments, but there's a margin of safety that's there. And that is so, so important in business. Now I want to share something that some of you in the UK, you may think about from time to time, and you may think, why in the world is it that, what's going on with our British pound? This is a very interesting chart. And I'm not trying to predict the future. I'm just showing you something that's a fact. Basically, in 1945, one British pound bought $4. Now, folks, if you look at this, one British pound, it has fallen all the way to where it can only purchase $1.21. Could the pound go up? Well, sure, it could go up. Anything could happen. But there's a lot of economic forces. There's a very long history of the pound going down. And there's a saying in currency trading, I don't know if any of you do currency trading, but there's a saying that you should, follow the trend. And the trend here is the pound is losing value. For me, my bet is that the pound is going to continue for a period of time to lose value. And as a result of that, if it were me, I would want to get rid of those pounds as quickly as I could and get into a currency that potentially could go up higher in value. Now, I'm not suggesting you do that. You've got your own strategy. I'm just telling you what I would do. So, but there's an advantage here for you if what I'm saying makes some sense. By purchasing Alamo Mortgage Holdings bonds and notes, you can get into US dollars, which have done better longer term. If you're not sure which currency will appreciate, because that's hard to figure out, everybody has an idea, but they're not always right. And you see how it fluctuates. Sometimes it goes up, sometimes it goes down. You could split your investment where you do half with us in pounds and half in dollars. And it's simple. We take care of all that for you. Basically, you send us pounds based on whatever amount of bonds you want to purchase or notes. And we'll ask you, do you want to have it as a pound denominated investment? Do you want it as a dollar denominated investment? Or do you want it half and half? And if you're not sure, you can just pick half and half. But if you're like, I don't believe in the pound, get me into dollars 100%, we can do that. If you're the other, maybe you think it's going to go the other way, we can give it to you in pounds. It's your choice, and we respect that in every way. And we're happy to do it the way you want. So with that, the nice thing about it is we don't charge any fees on the exchange rate conversion. We convert it at the current exchange rate. We're not trying to make money converting on an exchange rate. We get you positioned, and then long term, you are able to have some buffering from what's been happening. Or if you think that it's we can work with you, whatever you want on that. So that's kind of a nice thing that allows you to place capital. Small amount or a large amount, we can absorb large placements. There's plenty of mortgage notes that our team in Texas has access to buy as packages. So we can absorb large placements. Now, let's talk about the team just briefly. My name is Ben Miller. And first, I want to talk about the team. Our team has 150 years of business experience. It's actually 200 years. With over 50 to 100 years in the real estate industry in Texas. It depends on if you count mortgages or just real estate. Our team members have successfully managed or are currently managing investment funds, companies, and real estate projects worldwide, and overseen up to $1 billion in financial assets. Members of our team have also worked with clients, including BG Group, PLC, and Everett's. As far as myself, I have personally trained with the largest note buyer in the United States. His name is Eddie Speed, and he has purchased over 50,000 mortgage notes. By now, it's probably over 100,000 mortgage notes. It's a few years ago when I was first learning that I trained with him. So my background, I'm a businessman. I have been active in private business acquisitions in the US and Europe. I also founded several startup companies. I'm also the director of an emerging market bond fund, and I'm on the board of various companies throughout the world. My business philosophy is that every problem has multiple solutions. Education, graduated from the University of Colorado at Boulder, and I studied some languages. So let me go through the rest of the team here. Marina is our international investment coordinator. She speaks multiple languages, English, Italian, Spanish, along with Ukrainian and Russian. She really enjoys taking the time to get to know our clients and wants to work with them to make sure their passive income and investment goals are, really handled properly, where they're coming true for the clients. She's got a great education. She also has a Bachelor of Arts in International Relations. She's wonderful. Here's Scott Wynn. Scott Wynn is an industry expert for Alamo Mortgage Holdings. He brings 30 plus years of experience in buying owner finance notes. He's done it all. He has bought performing notes. He's bought non-performing notes. He is a specialist in a type of note investing where you're taking something that might be a non-performing note and turning it into a performing note. So he's very skilled at when you purchase a mortgage note and the buyer stops paying, being able to quickly get the buyer paying again, or being able to restructure the deal. So he's a very down-to-earth guy, and he brings a lot of experience to the team. Then we've got Fred Hobbs. He's actually the director of mortgage servicing for our mortgage servicing company. So Alamo has something really unique. Fred Hobbs has a mortgage servicing company called SecureNet Loan Services, and they service right now approximately 2,000 mortgages in the United States, where they're keeping track of the payments. They're calling the borrowers if they're not paying on time. They're sending them letters, and they even handle foreclosures if that's needed. So he brings that experience to the team, and he also will handle the servicing component of these mortgage notes, so that as a bond or note investor with Alamo, you don't have to do any of that. You just get your money deposited by bank transfer, electronic bank transfer. You never have to talk to a borrower. You never have to hear about why their mortgage payment is late. We do all of that for you. So we handle all of it. And Fred is fantastic. He brings a lot of experience. David Jones, he's a licensed real estate attorney in the state of Texas. He's a third generation lawyer. He's got a lot of experience in the mortgage note industry. And he helps with, if we have situations where we need to do loan modifications, we need to do workouts, we need to do even foreclosures or deed in lieu of foreclosure. We do all of that. Anna Kulikova, she is with investor relations, and she's originally born in Moscow, but she speaks English and Russian and Ukrainian, and she works with investors to answer their questions about Alamo Mortgage, and shows them how they can generate a passive income based on their unique investment goals. Mark DeRuyter, he's our chief technology officer, very skilled, and he helps with making sure that the systems and documents and processes we have at Alamo are top notch, so that we can always provide excellent service to our bondholders. Now I want to show you something that is very interesting. I'm going to show you an actual example of some notes. These are real notes. I'm showing you a real portfolio here. Again, Alamo Mortgage Holdings, we pay passive income over a defined period of time, 3 to 50 years. And our company purchases mortgage debt in Texas. And then we pay our bond or note holders 8%. The nice thing about it is we handle all the servicing, all the collections. You don't have to spend 1 minute doing that. You don't even have to think about it. You've got a team of professionals working for you. So this allows you to place the capital one time and receive passive income. You can also get on an annual investment program with us. And we love it when people are interested in that, because they may be in a position where they have a number in mind that they're looking to hit for passive income, but they're not quite there yet, but they want to get started on that journey. And we actually offer what's called a bond ladder. And I'll talk about that if somebody's interested in it one-on-one. But that's basically where over time we can get a plan to get you to the exact passive income you're looking for. In general, though, you can purchase $8,000 in passive income and it costs $100,000. That's how it works. Let me show you, because that's an 8% rate of interest. Now I will show you some actual notes here.
So this right here is actually an example of what a portfolio of loan notes might look like. So this is actually a real portfolio. And you look here and you can see the name of the borrower, the number of months. You can see the interest rate. This debt is actually pretty high, 14.75% is what they're paying on that mortgage. The monthly payment is $278.50. Then you can see the terms, the status, this sort of thing. So, I mean, you've got a list here, and this is an example of a package where a package of these mortgages can be purchased. This type of deal would be done by a larger investor. It would not typically be a single investor that would buy this package. For example, my company, Alamo Mortgage Holdings, this is the type of package that we might actually purchase, something like this. But if you're just starting out in investing, you might start out by, you're just going to buy one mortgage note. So for example, you might come in and this mortgage note, if you find something like this out on the market, you might try to negotiate down from, the unpaid balance at $89,570. Maybe you try to buy it for $59,000 or $69,000. But that would be one note. But you can also purchase packages of notes. And that's something that Alamo Mortgage Holdings is involved with. It's a company that's a United Kingdom company that actually purchases packages of mortgage notes. So wanted to give you an idea of what a package of notes look like. So this, right.
Okay, excellent. So now let's just briefly talk about bonds. Some of you as experienced investors know all about this already, but for those of you that don't have any bonds in your portfolio, I want you to think about this. There was a Nobel Prize winning economist named Harry Markowitz, and he's actually considered by many to be the grandfather of portfolio building. He won the 1990 Nobel Prize in economics. It's very competitive to win that. And he developed modern portfolio theory, but when it came to his own investments, what did he actually do? And this is a great thing for people to think about. He actually would split his portfolio 50% in stocks and 50% in bonds. So think about your own portfolio, folks. If you don't have any bonds or you have a low percentage, you might want to consider if that makes sense. The logic that he had on it was he kind of visualized his grief if the stock market went way up and he wasn't in it. So of course he wanted to own some stocks. But if it went way down, he was thinking how devastating that would be if he had all his money in stocks and didn't have any bonds. So he just made it simple. He split it 50-50. And folks, I'm not telling you what to do. I'm just saying it's something to think about. It's definitely something that one should consider. So let's talk about why Texas. What a great question. Why in the world Texas? Well, we secure our bonds with Texas mortgage debt. Texas is a top state. We have a civilian workforce of 14 million. We have also more people moving into Texas. Lots of people are leaving California. They're tired of the regulations in California. They're moving into Texas. And that puts upward pressure on housing prices. And that is fantastic for Alamo. So Texas, we are very laser focused on Texas. And our bonds, they provide passive income secured by real estate assets in the state of Texas. So let's talk about the advantages and the key features of the bond. You can reach your passive income goals more quickly, whether you're an individual investor, accredited, or whether you're an institutional investor. With this product, with the Alamo Mortgage Holdings notes and bonds, you can reach those goals, whatever they may be, rapidly. We also provide maximum diversification. So we're not just acquiring one mortgage note, we're acquiring packages of mortgage notes, and that provides diversification. So if one note doesn't succeed, if it has a bad payment history, we've got others in the package. It keeps you safer. No fees. We do not charge any fees to our investors. We just don't do it. We think that we ought to be able to make money by just buying the notes and going at it the old-fashioned way. Interest payment flexibility. You can have annual payments. You can have semi-annual payments. We work with you with what is better. And we also offer another opportunity with a capital growth. So we've got a lot of options for you, and we can talk about those in a one-on-one. So the suggested denomination is 100,000 pounds. It doesn't mean that we can't work with you if you've got a bit less than that, but we really think this product is best fit for someone that's kind of in that category. But if you're just getting started, we'll work with you. So how does the bond work? Well, it's very simple. Here's how it works. 100,000 pounds after a year, you got 108,000. 100,000 pounds after 5 years, you've got 140,000. 100,000 pounds after 50 years. Oh, this is beautiful. You got 500,000. So that's how it works. It's so simple. Okay. Should I invest in the bond? Well, that's something that you're going to have to decide. I believe that it is very well suited to an investor in the UK that's concerned about inflation. If you've heard about inflation in the UK and if you've seen the pound going down in value, it might be something to consider. How long is the term of the bond? Most are they're 3 years, 5 years, or up to 50 years. And 1 year before the end of the term, we give you an option if you want to renew or if you want to be cashed out. Either way is fine. We just remind you. Can you put the bond into your SIP? Well, self-invested personal pensions, that is actually subject to the approval of the SIP provider. But in most cases, I can't see a reason they wouldn't approve it. And if you need help with that, just let us know. We can help you in any way. What type of investment? It's a corporate income bond. This is not a government bond, but I think that's clear. Is it a regulated product? No, this is not a regulated product. So there is higher risk with it. But as we all know in investing, as you take on a little bit more risk, you get more return. I mean, it's just the nature of it. Who can invest? Well, an individual over the age of 18, a trust, a company. How's my money protected? We actually have created multiple layers of security and safeguards to protect investors' capital, which includes upfront and ongoing due diligence. Can you do joint applications? Yes, we can definitely do a joint application. How exactly is it different from maybe a government loan note or a listed, that is a publicly traded corporate loan note? Well, the loan notes are not, they are higher risk investments. Unquoted loan note issuers, of which Alamo would be in that category, and the loan notes themselves are generally not regulated by the FCA or any equivalent regulator. This actually, in some ways, allows us to pay a bit more because we're not having to pay the legal expenses of being, regulated. So that is something that we can pass on those higher profits to you. So that's a few details on it. And with that, the tax, basically, we just give you the payments. We don't deduct any tax. That's something that Each person has a different situation, their marginal tax rate, but we just pay you the full interest, and what you do with it after that is whatever you and your tax professionals think is best. Is there a limit on how much you can invest? There is no upper limit. And I really mean that. We're in a position where we can absorb large amounts of capital and put it to work quickly. So there's not an upper limit. We would suggest around 100,000 might be a good first limit, but that would depend on your net worth. It would depend on a lot of factors. It would depend on what you're looking to achieve, but it's kind of something that might make sense. Can I get access to my money early? Well, no, folks, you must be very certain that you will not require your money until the term expires. It's simply not possible to access your capital before the end of the investment term. The interest, we pay that to your bank account. How do you invest? That's the fun question. You simply invest by letting me know. Just give me a call. I've got a US number. Notice there's a +1 area code, or you can contact us on our website. Just click on that link and go there. So that is our presentation for today. And I really am looking forward to setting up some one-on-one calls with people that are interested to kind of discuss their specific situation and see if we might be a good fit. So I want to thank everyone for coming, and this is something you should think about. I wish you all a fantastic day.